In today's episode, we will be covering Antero Midstream, stocks symbol AM. And before you dismiss this company like I initially did, check out their 5-year returns. Absolutely crushed the S&P with returns of 144% versus S&P returns of only 90%. Despite this 5-year outperformance, what excites me even more is that it can potentially act as a hedge for our tech-centric portfolio, that when major bearish events happen, like geopolitical risks or the return of high inflation, it utilizes these as tailwinds. It also benefits from the growth in data center buildouts and for a favorable presidential political environment. It really has been able to continue to soar during all these events. The past 5 years are an extremely volatile period. This also might just be the start of a long-term bull trend, as there are two major tailwinds. The first tailwind is LNG acting as a transitory energy source for data center buildouts until nuclear or renewables plus battery storage is available in the long term, greater than 5 years. LNG can be stored and used to cover the peak demand periods and enable constant uninterrupted power supply, and is readily available quicker than installing new power plants or transmissions lines. This in particular benefits Antero since they operate in Ohio, West Virginia, and Appalachia near much of the data center buildouts. Let me emphasize, though, that data center buildouts driving increased energy usage is nice and it is a tailwind, but the main reason to buy Antero Midstream is not because of this. Frankly, they're much better stocks for the AI trend. The second tailwind and the main engine for the growth of LNG is the growth expected for the US in exporting LNG. As seen in this chart, the green and orange are for LNG export demand, while in yellow is data center EV driven, which makes up a small sliver. In total, LNG demand is expected to increase by greater than 100% over the next 5 years, from 27.5 to 58 billion cubic feet per day, of which exporting makes up 46 of this 58 billion. The reason why there is expected to be such a surge is due to two reasons: energy security and energy scarcity. Up until the Russian escalation in Ukraine back in 2022, Europe received most of its natural gas from Russia for the past decades, between 40 to 45%. Since then, Europe has reduced its demand and dependence from Russia and looked to purchase from an ally for energy security reasons. In the United States, with the shale gas revolution and increased export capacity, was able to provide an abundant and low-cost supply. Outside of Europe, in Mexico and Asia, there's a massive scarcity of energy to support their economic growth. One positive aspect of LNG is that you can deliver it to any market and store it for a period of time. It's a lot more flexible than having to build out a pipeline. In summary, with abundance of supply keeping costs low, coupled with an unprecedented build-out of LNG export infrastructure in a favorable political environment, LNG export growth in the United States is a tailwind I'm excited to follow in the quarters ahead. There aren't many sectors that have the opportunity to double their demand in the next 5 years. So the macro tailwind is favorable. LNG exports are bound to soar. So how does Antero Midstream fit in all this? Before we discuss, please make sure to read the disclaimer in the notes below. We're not financial advisors, nor anything we say should be taken as formal advice or formal recommendation. Also, if you enjoy company deep dives focused on long-term tailwinds and innovation, please help us out and click subscribe, as we are aiming to release weekly episodes. In simple terms, within the natural gas segment, there are 3 segments: upstream, midstream, export. Upstream suppliers such as EQT and Terra Resources focus on searching for the natural gas and then extracting it. Midstream companies focus on the initial processing, then transporting the gas from the wells to the consumer. It can be long transcontinental pipelines, like Williams operates, or in this case, Antero Midstream, which focuses on the first mile transport from the well to connect to the larger transcontinental pipelines. Export companies are led mostly by Cheniere in the United States, with Venture Global's aiming to overthrow them as a top exporter within the decade. They're in charge of liquefying and then storing these gases into liquids to allow it to be shipped worldwide. The export segment is a very costly and specialized segment. So there's very many upstream, very many midstream, but very few exports, with Cheniere owning a majority of the market share in the United States. We may like this play on the growth of LNG exports, but if we were to invest in Antero Midstream, we need to understand what makes them unique. First point is their customer is their former parent company and current controller shareholder, Antero Resources. All the volumes the Antero Midstream transports processes is dependent on what Antero Resources extracts. And second point, Antero Resources and thus Antero Midstream only operate in Appalachian shale regions in Ohio and West Virginia. Thus, a bet on Antero Midstream is a bet that Antero Resources can outperform others like EQT in extraction, and that the Appalachia region, which is typically costlier to export from than from Texas, is where the LNG export boom will be. From a financials perspective, Antero Midstream split off from Antero Resources to give investors an opportunity to benefit directly from the boom in the shale gas revolution without the commodity volatility prices that would impact upstream vendors. Even though Antero Midstream has had significant stock growth, the main reason to own their stock is due to their stable, income-generating profile of a midstream company. They operate with a fixed-fee long-term contract with Antero Resources, so they are not directly dependent on natural gas pricing. Being a dividend growth stock, the main metric that I care about is to see their adjusted EBITDA continue to increase, which it has with a 17% CAGR since their IPO. With this increase, this will drive their dividend payout increases. As you can see here, this dividend has an upward trend and even increased their payout during the COVID era. It consistently pays a 5+% dividend and should be able to continue these increases as long as free cash flow and adjusted EBITDA continue to increase. With Antero Midstream, the three watchouts I'll be looking out for in the quarters ahead are first, the weekly natural gas storage report provided by the U.S. Department of Energy, as well as the Henry Hub price index for natural gas. Even though Antero Midstream isn't dependent on the price of natural gas directly, their upstream supplier will be. In a bull case for Antero Midstream, we want to see the volumes low and prices high, as that will mean more volumes will be extracted and thus moved and processed through Antero Midstream. The second watchout is obvious, but keep an eye out for any updates from Antero Resources, as volume and capex from them directly impacts midstream's volumes. Also, pay attention to EQT as well, as EQT is the major player in this region, so this can be a proxy for how the natural gas trend in Appalachia is looking against the macro trend in Tailwind of a boom expected in LNG exports. For Antero's perspective, they hope that the volumes can come from their region in Appalachia versus the cheaper Texas sites. Last watchout, as we mentioned, is we need to see free cash flow and adjusted EBITDA to continue increasing so the dividend payout can continue growing as well. Put in Antero Midstream through my 5-point checklist, and for founder-led leadership, I have it as a neutral. Their founder just stepped down earlier this month, but he is being replaced by a company vet who's been with Antero for over a decade and served in various leadership roles with both Antero Resources and Antero Midstream, most recently as the Chief Financial Officer. The long duration at the company is favorable, but I discount this as neutral since in general, I do not like when finance leaders are rolling into the CEO position, as their focus seems in general to be hitting the quarterly metrics versus long-term strategy. Of course, there are exceptions like dLocal CEO Pedro Arndt coming over as CFO for Mercado Libre, but in this case, I'm not getting the strategic levers vibe. Second point is reasonable valuation. I have this as a weak. For asset-heavy companies like Antero, I prefer to evaluate them based on price to free cash flow. Currently, this is around an 11, which is 20% elevated over their average price to free cash flow ratio of 9. An undervalued valuation would be around an 8 for the midstream valuation. Third point is revenue profit growth, which I have as a strong. Main metric here is increased adjusted EBITDA, which has grown 17% CAGR since its IPO. As long as volumes continue to increase, this seems like a strong bet to continue having a stable and strong increase. Fourth point is total addressable market, which for the theme of energy scarcity and energy security, it would be very large. However, for Antero Midstream, it is weak since it is betting that LNG export growth will predominantly come from the more costly Appalachian region, and Antero Resources would be the best at extracting it. In both cases, Antero is not the leader. Texas is cheaper than Appalachia region due to logistics, and EQT is a top dog for the region in extraction. I understand that a rising tide lifts all boats, but I'd rather go with the top dog, or better yet, a player who can benefit from LNG exports no matter who extracts it and from where. The last point on my checklist is evaluating the overall tailwind of LNG export growth. I have this as a strong, since I'm optimistic on this trend being an outperformer for the next 5 years. The United States has an abundant supply and expanding export infrastructure coming online to fill this global void, so U.S. natural gas companies will be a growth segment no matter who the president is. Overall, with all five of these levers and points evaluated, I am a neutral. I love the 5% dividend and believe the dividend can continue to grow. Much of this LNG export upside, I believe, is already priced in since its valuation is 20% over its average price to free cash flow ratio. I'm going to pass it over to you, Dad, to look at the technicals and get your advice on an add-in Antero Midstream.
Okay, yes, I'd like to review for Antero Midstream the stock technical Bollinger Bands. As you can see, it's spread out. The upper and lower band are more spread out than at other areas. So that means it's going through a little bit more volatility than usual. And I would say that the Bollinger Bands are neutral at this point because it's pretty much almost very near the middle line, which is the 20-day moving average. So the Bollinger Band is neutral. And then we're going to look at the moving average next. As you can see, the 50-day is above the 200-day, which is good. That's generally speaking bullish. And then the 200-day is sloping up, and the price is above that. So the moving average is very strong. So that's good. Then to go over my checklist, it has no peg ratio, so I consider that to be negative. And then if you look at the earnings history, 2 of the last 4 are beats, so I consider that to be weak. And then the net profit margin is very good. The net profit margin is 39.5, which is very strong. The long-term debt to equity is 147%. And really, it's supposed to be under, I prefer under 25%, but that's kind of hard for a lot of companies. So the profit margin, if it's under 50%, that's considered okay. I'm not the net profit margin. The long-term debt to equity is considered weak, very, very weak, actually. It's very weak. Then as I look at the analyst's opinion, I have the analysts I follow. I have 2 weeks, 2 neutrals, and 2 buys. So that's considered, for the analyst's opinion, neutral. And then looking at the 50-year to 200-day moving average is considered a positive because the 50-day, as we talked about, the 50-day is above the 200-day, and the 200-day is sloping positive, so that's considered positive. The RSI, Relative Strength Index, is neutral. Bollinger Bands, as we discussed, is neutral. And the long-term tailwinds, that's what I like to dive into a little bit. On the positive side, natural gas, I think that European Union is going to need more natural gas, so that's going to help out Antero Midstream. But it is kind of a niche. It's in the Appalachian region, the Appalachian area, so it is kind of a niche regional play. And to be honest with you, I think I would rather consider something like even like an LNG. The symbol is LNG for Cheniere Energy. And the reason why that is they have a process that goes from natural gas to liquefied natural gas, which is then shipped to Europe. So to sum up everything, I'm a neutral on Antero Midstream. And if you look at the chart, like we've shown, the chart looks very, very good. But I don't know if it could continue that pace. The 5-year was 140%, I think it was. It does have a dividend. Dividend is over 5.2%. But and the earnings come out on October 29th, but which is good because it shouldn't be that much. Wouldn't think there'd be that much volatility. But it is kind of linked to the natural gas price. But again, there is some tailwinds in that because of the Europe needing so much natural gas. And so that's my take on it, Scott.
Thanks, Dad. In summary, this was a fun company to cover to learn more about the LNG growth story. However, we are in no to add Antero Midstream to our public portfolio. Tons of better companies we will cover in future episodes, as we do like this energy scarcity tailwind. Thanks for watching our episode. To help us out, please like, comment, and subscribe as we aim to produce regular episodes about long term innovative focused companies on this father and son podcast.